Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined by Zacks strategist Brian Bolin. And we brought two companies in the same category and industry. Why is that? Because 9 companies are Zacks number one ranked strong buys in this industry. And it is a hot one. It's the home builders. So I'm going to lead off with my home builder. Then Brian is going to follow up with his. The story is kind of the same on all of these. Things just aren't as bad on the home building side as what everybody anticipated. Yes, sales are down and down pretty sharply, anywhere from 20 to 30%. But the home builders are working through their backlogs and the buyers have returned, albeit on a more slower pace. But that slower pace isn't necessarily a bad thing for these home builders. They've been able to keep really high gross margins, which is what goes to their earnings. And yes, earnings are down off of last year's basically record highs for most of the home builders before the mortgage rates rose. And so they can still have their high gross margins, just a little bit less sales. Yes, earnings down a little bit, but still everything else is working in their favor right now, including demographics, with the largest generation in US history, the millennials, wanting to buy homes, still out there wanting to do so. And the second largest generation, the baby boomers, now selling and wanting to retire in places with sunshine and no snow. And so that is putting pressure on a lot of these markets. There just is nothing available, but the home builders are there riding to the rescue. They're the ones with the product. They are building as quickly as they can. And as I said, things are looking good for them on the gross margin side. So let's take a look at the company that I'm going to talk about today. It's PulteGroup, ticker PHM. It is the largest publicly traded home builder. It's in 24 states. It's in most of the major markets. So it gives us a good idea of what's going on out there in home building. And as I said, it's looking pretty good. But let's take a look at those earnings and I'll show you what I mean. So you can see here with Pulte that 2023, 2024 earnings looking a little bit lower here in 2023 because they made 1080 in 2022. That was near the record, as I mentioned, and now only expected to make $9.13. But the analysts were much more bearish. And you can see that 6 analysts have raised estimates since their first or their last quarter earnings report. And you can see the earnings are up dramatically for this year since 60 days ago. They were only looking for 744, now looking for that 913 because Pulte said in that quarter that there was still a strong desire for home ownership out there, and they're still able to see the buyers coming in. Also, first quarter gross margins for them were 29.1%. And for anybody who watches the home builders knows that anything over 20 is basically indicating that it's a bull market. The builders are in control. They have costs down, they have maybe pricing power, but to get up as high as 29.1% at a time when the mortgage rates are so high, and a lot of these companies are spending quite a bit of money to buy down that rate. So say mortgage rates are at 6.5%, they will self-finance you and get you down to a level that makes it more attractive for you to want to buy that house. It could be anywhere from 5% or 5.5%. It depends on the home builder. I've seen some even offering 4.99% as a financing, incentive. And that is because obviously a mortgage with a 4 might be able to get you in the door looking around and signing that new contract. So PulteGroup, this is impressive that the analysts have turned around here, but this is why we have 9 Zacks #1 ranks. They're turning around on all these companies. What does this look like on the chart? If we take a look at that, It's you can see the decline in earnings. Normally, that would be a bad sign, like, something's going on, the earnings are pulling back, but they are coming off that all-time highs. And so I'm not that concerned, especially with the gross margins remaining as elevated as they are, and the buyers returning, not in the same kind of frenzy level that we saw the last couple of years, but that's okay because the home builders could barely keep up with demand. And that's also not really a good thing for their industry. So this market is much healthier. PulteGroup has about 35% first time buyers, almost 40% move up buyers, and then the rest are active adult, and they own the Del Webb communities. I know many of you know the Del Webbs. That's popular with the baby boomers. It's 55 and older. So they are in all the key areas, the key metrics here as we move forward. Another thing that's also really great about the home builders right now is that they're dirt cheap. PulteGroup is actually a classic value stock across all metrics, and you don't see that very often, especially not with the stock that's trading at 5-year highs. It has a PE of just 8. That is dirt cheap, under 10. It has a PEG ratio of 0.5. That's under 1. That indicates both value and growth. As a price to sales ratio of just 0.4 and a price to book ratio of 1.7. It also pays a dividend. Of course it does, yielding just 0.9% right now, so almost a percent. But it has a very large share repurchase program at which they just increased to $1 billion in April of this year. That's how much confidence they have that things are really looking up for them with the buyers returning here in 2023, and the low inventory out there on the existing home market means if you want a new home this year, you may have to buy a brand new one. So that puts them in the driver's seat. That's why I really like these stocks. So PulteGroup, yes, it's trading at these 5-year highs. I know it's hard for many investors to buy in at the 5-year highs, but as I just mentioned, it is a classic value stock here, and these earnings are starting to turn around. You can see 2024's line starting to go up again because things just aren't as bad as what everybody assumed they would be on the home building side. So that's why I like PulteGroup, ticker PHM. I'm a big fan of all the home builders here. And now Brian is going to fill you in on another one that is also looking red hot this year.
This is Brian Bolin, and I am the aggressive growth stock strategist here at Zacks, and I have a home builder as my top stock pick of the week. So Lennar is my top stock pick for the week, and that's LEN as the ticker. It's a Zacks rank number 2. That gives it a buy. It's got a D for growth and an A for value. And if you know anything about me, you know I'm a growth guy, and I usually like to see the style scores completely different than that. I want to see a strong growth score and a weak value score because that tells me I'm right on the right path in terms of looking for a growth company. But in this instance, we're doing top stock picks of the week, and I chose this one because earnings date, look at that, it's coming right up. It's the 14th. It's AMC. That stands for after market close. AMC. You thought that was all about a movie theater, but no, it's the timing of the report. Is it before market open, BMO, or is it AMC? Isn't that, well, I hope no one learned that, really, to be honest with you, but maybe they did. Take a quick look at that chart year to date, and we see nothing but up. Let's go ahead and look at the important numbers that we always love to look at. Are you beating the number? And we can see over the year they are beating the number, beating nice, beating barely, beating nice, really big. So they are beating the number. That means we can trust management because they are guiding Wall Street to the proper position. Does Wall Street see something coming? And that's the estimates moving up. And we see a tick higher of a penny. We see actually a tick lower over 60 days here for that. And then for the full year, we see it going to 972 to 979. And we got a little confusion, a little up and down, up and down, up and down. Next year's a long way off. We will say that. Let's just scoop ahead and see that this is like why this one won't ever really show up on my growth videos, because that's growth contraction. And aggressive growth is not like aggressive contraction or any contraction for that matter. So let's jump over to our multiples and see what is going on in the world of the multiple. Okay, so forward multiple 11.6 times, well below the normal stock average, index average of 16, 17, 18. We did see some growth here, but we've been warning that that's the most recent quarter. But it looks bad overall, right, for the top line. 1.35 for your price to book. So your value players love this because 1 times is the value of all the assets on the books at the moment at the end of the quarter. So that's where we think about that. And we can see book value here, it was in the 80s there. Price to sales right at about 1. So if they can increase their output of sales, their stock price will move up according to that reading. But you never know. And I'm a big fan of looking at growth in the top line and seeing that margins expand, because that will lead to EPS moving higher, which again will then lead to a bigger multiple. So our margin's going kind of the wrong way here, and an NA there. I hate seeing those NOs. It could just be that they're reporting this week, and I don't know. Could be a ghost in the machine. That's what I prefer to default to. So we can see earnings estimates here have come down on this, but then, now we've got that kind of tick up, which has made them been a buy. The stock did not care that earnings estimates moved in the wrong way. It just went that way, and that's just that. And that's that. That's what they say sometimes in the movies when some character is getting whacked. That's that. But geez, oh man, how many beats do you see? I mean, I can't even find. Oh my God, here it is. I was gonna do all these, but there it is. The last time that they missed was 2019. That was I remember back in 2019. That was long before I was 50 years of age. So there. All right, let's take one more look at something else. So we've seen now why this top stock pick of the week. This is the Zacks research system. It's an app that we sell here at Zacks that I use very frequently, all the time, as a matter of fact. But I'll draw your attention to this section here where we got our valuation table here, and we can chart it against the industry. And here you can see the forward multiple for the industry is 9.5, so it's 6 for getting a discount here. I'm sorry, that's the trailing. Here's the forward, because I just said 11.7, and we're at a discount there. Price to book, we're also a little bit lower on that, and we're right in line on price to sales. But we can see here, I don't like that revenue thing, and now I've blotted it out and made it hard to see. But we can see the industry is contracting at a bigger rate, and that's not cool. Here we have the EPS for Lennar contracting pretty good this year from over last year, but so is the whole industry. Next year we're going to pick it up, but not to the degree the industry is. It's going to be an interesting play because I think that this beat this report's coming up at a very important time because we have the CPI number as well as the FOMC meeting. Both of those, inflation and interest rates, play very large, very, very big factors into home buyers. So it's always going to have that. It's important to have all that greater context on your radar screen, because as much as we want to think as Lennar is a stock in the market, it is a market of stocks. This is very much a macro play right now, and we're at that time of are we going to be looking at a pivot? Are rates going to go back higher? It's almost like there's a 1/3 chance that the rates move higher again, but we're looking for the 2/3 chance that they stay the same. That's too much information now. I think I've gotten you on. But Lennar is my top stock pick. Well, that was a lot of fun. Be sure to join us next week when we take a look at 2 more top stock picks of the week. But in the meantime, make sure you go to Zacks.com/promo for all of our latest promotions.